Alrighty, folks, we got the CPI data this morning for July. We have to break it down in this video, and of course, we'll break down how the stock market's reacting, which right now, all the indexes are in the green. They're looking really good, so jam-packed video. If y'all find value, hit the like button. Make sure to subscribe. We're almost at 30,000 subs, guys. And don't forget to get up to 16 stocks for Moomoo, the sponsor of today's video, by going down below. Once you open up your account and fund it with at least $100, you get 5 stocks right off the bat, and fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks each, up to $2,000. And listen to this, guys, fund your account at least $5,000. On top of those 15 stocks, you also get a free share of either Tesla stock or Expedia stock, which makes this promo a no-brainer. So get on it, link down below. And with that being said, guys, cheers, let's dive into it. So we got the CPI data for July this morning. That came out at 8:30 a.m. on the East Coast, and the markets ever since that point, well, they've been exploding up until about, let's just say, maybe 15-20 minutes ago when we started to pull back. We'll talk about that in a second, but around the time when we got the CPI, we started to see a little bit of choppiness, but ultimately we broke out into open, and at open, and we got all the way up to 451 here on SPY, and then we saw a bit of a pullback, which we're still seeing that right now in real time when I'm making this video, so you guys can see we're pulling back a little bit, but still holding this trend on the intraday chart here on SPY. And you guys can see triple Q. Let me pull that up and show you before we actually break down the numbers, the data, guys. This also ripped at open all the way up to 374.36, and now we are pulling back a little bit intraday, down about 0.75% from that high, but still, holding the uptrend, looking pretty good in my opinion. You guys can see that right here. And on the 4-hour chart, let's quickly pull this up so I can show you guys we're still trading in this downtrend, at least, from the end of July, you could say, until now. We're trading in this channel that you guys can see, especially if I draw out this channel tool or use this channel tool. Let me show you guys this. You guys can see even with triple Q's run of 1% right now, we're still trading in this channel, and SPY's probably in a channel still as well. Let me pull it up and see here, guys. Let me zoom in, and mind you, of course, on the in the grand scheme of things, the uptrend is still holding, but we're just looking at the past, let's say, 2-3 weeks of trading, which if I clear the drawing set here and zoom in a little bit, you guys can see, boom, we have SPY still in that channel as well. So that's a quick update on what's going on right now. We're not fully breaking out or anything like that, but we are seeing a good amount of green out there, and the VIX is down 4.5% after we got the July CPI data. So let me actually pull this up and show you guys what's going on. Bear with me here. Let's see what's going on here. I'll go through all the numbers, of course, as we do every single month here, guys. So you can see right here that the consumer price index, let me zoom in a little bit. Oops, maybe not that much. There we go. The consumer price index for all urban consumers rose 0.2% in July on a seasonally adjusted basis, the same increase as in June. And over the last 12 months, the all items index increased 3.2% before seasonal adjustment. And maybe I'm wrong, but I believe the estimate was 0.3%. So the estimate had it rising or going up 0.3%, but it came in at 0.2%. I could be wrong on that. I might be wrong. Let me know in the comments. I forget exactly. But overall, the markets are loving it, as again, all the indexes are up right now, which leads me to believe maybe inflation came in a little bit less than expected. That's good news, right? That's really good news. And when it comes to core CPI, let me come down here a little bit more to show you guys. The index for all items less food and energy rose 0.2% in July, so the same as regular CPI, and that comes in at 4.7%. You guys can see the all items index less food and energy rose 4.7% over the last 12 months, which that's more obviously than regular CPI, right? And the energy index decreased 12.5% for the 12 months ending July, which is good. And the food index increased 4.9% over the last year, which makes sense. You guys probably know that in real world application, food's gone up, food at home, food away from home, all of that has gone up a significant amount. You guys can see here, if I come to the categories, which is what I want to focus on. Actually, wait a second. Before we do that, look at these charts, right? Look at this. This is the 12-month percent change in CPI for all urban consumers. It is heading in the right direction, which is down, right? The all items is the blue line here. Then the all items less food and energy, which is core, is the red line. They're both going down, which is good. And the bar graph here shows that as well, right? We have the 1 month percent change in CPI, yada, yada, yada. That has come down over the last couple of months, over the past year, which is good. Actually, now that I'm looking at it, back in August of last year, we were pretty much right where we are now, but we haven't seen any crazy spikes like we did back in September, October, January, February recently. It's been calming down over the last couple of months here, which is a good sign. And let me see here on the different categories, guys, if we saw any crazy jumps in July. It looks like fuel oil has come up, which you guys have probably noticed. Gas has gone up, whether you live in Cali, whether you live in New York, New Jersey, right? It's gone up. Here in Jersey, it's definitely gone up, guys. We can see in July that came in at 3%, and now it's still, minus 26.5% for the year. But it did jump a good amount from the 0.4% drop in June to the 3% gain in July. That again is fuel oil and food at home. Let's look at the important categories here, guys. Food at home increased from 0 flat in June to 0.3% in July. That annualized now is 3.6%. Again, that's food at home. And food away from home decline, which is actually good. If you guys like eating away from home, 0.4% in June to now 0.2% in July. So a cut in half from June to July. That's good for food away from home. And annualized, it's still high, 7.1%, but it is heading in the right direction. The monthly numbers are decreasing over the last couple of months throughout the course of this year for food away from home, which is a really good sign. Let me see any other categories here that I saw anything significant in. Looks like used cars and trucks declined again, which is good, from 0.5%, negative 0.5% in June to negative 1.3% in July. Annualized, that's negative 5.6. That's great. And for new vehicles, that also declined from flat in June to negative 0.1 in July. That was 3.5% on an annualized basis, which is phenomenal. And yeah, guys, pretty much everything else, maybe not everything else, but there's nothing else really that stands out to me here in terms of any categories that are going up or down like crazy month over month. It really seems like inflation, although it's not where the Fed wants it to be, which is 2%, right? That's where it needs to be. Now we're still at 3.2%, so we're still well above that. We're not there yet. But inflation's definitely calmed down. It's coming down in these major categories. Sure, maybe fuel oil is coming up a little bit, but it is summer. That's typically what happens, right? We notice that. That's kind of a trend here over time. Fuel typically goes up in the summer, whatever. But overall, inflation does seem like it is coming down. Now, the big risk is this kind of just a short-term dip? I know a lot of the bears out there, the perma bears, if you will, the Peter Schiffs out there. Although I do like Peter Schiff, I do believe in gold. I'm not going to bash the guy. He definitely is a perma bear. We all know that, right? And he's in the camp that, okay, inflation's come down a little bit right now, but he and a lot of other people think it's going to reaccelerate massively in 2024, which obviously nobody wants that. But people are saying and predicting that is going to happen. That's the case. And of course, you guys have to realize and take everything with a grain of salt. A lot of these guys, like Peter Schiff, like other guys that are quote unquote perma bears, doomsdayers, if you will, they're kind of pushing their own agenda, right? They're selling their mutual funds. Schiff has the gold mutual fund or this or that, or he's big on gold, which would do well in these, world ending or economically tragic situations, right? So you have to realize everybody's trying to push their own book, especially the perma bears. So take that with a grain of salt, but that is definitely a scenario that's possible. It's a possibility that we do get, okay, inflation shot up, pulled back a little bit. It might shoot right back up totally possible. That's the bearish. That's the bearish thesis here, and that, of course, would be awful because the Fed then would raise rates that have to, now everybody's pricing in, especially in the stock market, that the Fed is done raising rates aggressively, right? Because inflation's cooling off. And if it were to come back up again slowly, or maybe we saw a rapid spike in inflation again, that's going to change the Fed's plans. And what's going to happen? Stocks are going to reprice because stocks are future-looking vehicles, right? Forward-looking vehicles. I'm sure you guys have heard that. So what do you think? Let me know your thoughts in the comments. Smash that like button. Make sure to subscribe. We're almost at 30,000 subs, guys, and 70% of you are not subscribed, and it's completely free to do it. Make sure to subscribe. I appreciate you all as always. And of course, don't forget to get your free money for Moo. Once you open up your account using that link down below and you fund it with at least $100, you get 5 stocks right off the bat. It's free money, guys. And if you fund your account with at least $1,000, you get 10 more stocks, totaling 15 stocks. Each of those being valued up to $2,000, by the way, guys. And listen to this, the best part of the promo, once you fund your account at least $5,000 on top of those 15 stocks, you also get, for a limited time, a free share of either Tesla stock or Expedia stock, which makes this promo a no-brainer. So get on it, use that link down below. And with that being said, guys, cheers. I'll see you later.